can see time is around 11:37. Let's look into Bitcoin trade analysis on 16th as well as 17th of April. And let's decode the trade and see how the market behaved. The first thing what we need to do is to mark the weekly VWAP level. So let's try to mark the weekly VWAP level and see in case the weekly VWAP level shows some kind of confluence here. And what we need to mark here is to know the previous day high as well as the previous day low as well. You can see this was yesterday's high and this was yesterday's low, I guess. And you can see a bearish candle. If you mark this candle, it seems to be a very bearish candle. And I think this is yesterday's low, or you can consider the close price as well. And what you see here is that the market here came all the way, failed to make a lower low here, guys. This is the low on previous day low, guys. Or if you look into a daily time frame analysis and see here, and let's take this out here. And you can see this is the previous day low, this candle, bearish candle over here. And what you could have expected is that market rejecting from higher levels and continuing further. But what happened on 15th of April is that you can see market swept this high and swept the swing high and closed between this range, guys, clearly signifying bearishness. So what you could have expected is that the market targeting this low. And what happened is that you can see the market rejected again from 200 moving average and failed to make a lower low here and didn't close below this low, guys. You can see this low over here. So what we need to understand here is that if you might have expected the market to close below this low, the next target would be this low and this low. But what happened instead is the market came all the way to this low and here it liquidated and rejected, failed to make a lower low here or closed below this low. Instead, the market rejected price from these levels and rejected from 9 as well as 21 moving average and closed within this range, guys. You can see this is the range where the market closed, clearly signifying some bullishness. So after this close, you could have expected the market to reverse itself. I hope you're understanding, guys. So let me explain to you clearly. This is yesterday's high as well as yesterday's low. This was on Tuesday, guys. So we are analyzing it on Wednesday as well as Thursday. So what happened on Wednesday is that the market swept this previous swings high and closed between this range, guys, below this range. You can see the body of this candle. It closed between this range. And what we need to see is this after this kind of huge bearish momentum, the next target would be the market breaking this low, guys. You can see the next day market seems to break this low, but market broke this low, but rejected price from lower levels and again closed within this range, clearly signifying bullishness. So for next day, what we could have targeted is this liquidity high over here. This is where you could have targeted. And you can see after this kind of huge bullish momentum over here, the market is trading above this 50 levels over here. So what we can expect is that the market might continue further bullish. So this is the 50 levels on this is the 50 level. So what we can expect here is that the market might even break this high, guys. So this is our target levels. So what we can consider this to be is our target level, guys. So let's double mark this and make it a little bit thicker. So I hope you understand how you need to analyze in a daily time frame analysis. So this is open, high, low, close strategy, guys. In case if you want to know about this strategy, go watch YouTube channels based on and learn how to trade the open, high, low strategy. And let's look into a 5-minute time frame and see here. Now we are analyzing Tuesday's trade analysis, guys. You can see the market is taking support from here. So there is a very good chance that the market might continue all the way to this level. But in case if the market rejected price from these levels, you can see there is another order block level here. You can see this is the last down candle, which actually broke structure towards the upside. So what you can expect is that the market might mitigate these levels over here and continue further bullish, guys. This is how I'm expecting the market to be here. And this is the 50 levels of this impulsive momentum towards the upside. So in case if you consider this impulsive momentum and the market is trading above 50 levels, so what you can expect is that the market changing market sentiment from being bullish to bearish. So you can see here the market is kind of heading towards the upside. And in case if the market closes above this level, guys, and we are waiting for a chalk formation here. Here also the market clearly broke this level and formed a chalk over here. You can see here. And what you can see here is that in case if the market breaks this 200 moving average, we'll look for upper positions, or we'll wait for retracement and see guys how the market here behaves, or better we'll look for closing above this level because this is a clear order block level. So once if we see a close above these levels, we are going to take long position and targeting all the way to this high, guys. You can see this is the high which I've already mentioned you, the thicker line over here, and this is yesterday's high, and this is yesterday's low, and this is the swing low where the market failed to make a lower low. Instead, the market rejected price from these levels and closed between this range, which I've already mentioned to you. And what you need to see on Wednesday is that if you try to plot the anchor gap level over here, this is the anchor gap level, guys, and you can see the market sentiment is clearly bearish. And you can see this kind of order block levels here. You can see this is a clear order block level, guys, where the market came, mitigated this order block, and continued further selling towards the downside. But market failed to make this low over here. Market failed to make a lower low here. So what you could have done is that to enter short position here, keeping your stop loss just above this candle itself. Why you should not consider this order block level here is because you can see the market didn't impulsively break the structure over here. You can see only this impulsive candle, the last up candle, which broke structure towards the downside here. You can see here where the market clearly broke this swing low also, a clear break of structure. And the market showed some kind of inducement levels and again came all the way to this order block level. And you could have easily taken a position over here, keeping your stop loss just above that candle and targeting all the way to this low. You can consider this low or you can consider this low, but you can see the market came all the way to this level, but instead of making a lower low here, the market here rejected price from these levels and formed a chalk over here, breaking this level and even breaking this order block levels as well. Once if this order block level is mitigated, it doesn't hold any value. So you can see clearly the market formed a chalk here, guys, changing the whole sentiment here from being bearish to bullish here. You can see this swing momentum, which changed the entire perspective from being bearish to bullish. And if you consider this impulsive momentum towards the upside, and if you try to plot the fib levels over here, the common point between this to the common point between this, you can see the market is trading above the 50 levels over here. Or if you consider this swing momentum, guys, or if you consider this momentum over here, the common point, anyways, the market is at 50 levels only. And what you can see here is that the market came here. The market didn't impulsively break this candle high, guys, but definitely you can see here the market very aggressively broke structure towards the upside. So you can consider this to be an order block level. But below this order block level, there is fair value gap over here, which has not been mitigated. So you can expect price to come and mitigate this fair value gap, and that's why a lot of order blocks getting failed over here. Even though the market aggressively broke this structure above these levels, this is not a swing low, guys, nor this is internal structure over here of this momentum. So this is not a swing low, so we can't consider this as an order block and take trades based on this. So what you need to see here is that you can see after this the market rejected and closed above the VWAP level. Again aggressively came, again closed VWAP towards the levels. And what you could see here is again after this neckline breakout, guys, you can see a clear breakout structure here. Initial chop formation, the market retraced to 50 levels, so you could have easily taken long position after this kind of bullish candle, keeping your stop loss just above this candle itself. You can see after this candle and targeting all the way to this swing high, guys. This is one trade where you could have easily taken. You can see this is one trade setup where you could have taken, where market rejected price from the day VWAP level and you could have targeted a swing high. But what happened here is that again the market rejected all the way here and again took support from the day VWAP level and broke towards the upside. Again rejected price from these levels because there is an order block level here as well. You can see this is an order block level, guys. Once if this order block has been mitigated, it doesn't hold any value. So you can consider this to be a 5-minute order block. And this order block level has been broken towards the downside, and there was a fair value gap here. So the market mitigated, again rejected, but failed to make a lower low. Instead, the market would have broken this low, guys. We could have looked for short position here, but instead the market didn't break low, but instead broke towards the upside, clearly signifying bullishness. So with this impulsive candle is where you could have easily taken long position over here, keeping your stop loss just below this candle itself and targeting all the way towards the upside. And for target levels, what you could have done is to plot the fib extinction levels, the common point between this to the common point between this to the common point between this. You could have targeted it all the way to 1.68 level over here. You can see this is the 1.68 level where you could have targeted. You can see, guys, after this order block level. And what you could have seen here is that this is the target levels for today. So since the market failed to make an higher high here, rejected here. And this is my target levels, which I've already mentioned to you. So this is the 1.68 level where you could have expected. And you can see after this, the market showed a huge bearish candle over here. And after this kind of candle itself, you could have expected the market to reverse, keeping your stop loss just above that candle itself. So short position, or after this kind of rejection candle from 9 as well as 21 moving average, you could have kept your stop loss above that candle itself and targeting all the way to swing low here. You can see this is the swing low where you could have easily targeted as. This is one trade, another trade setup where you could have taken based upon risk to reward ratio. But definitely, let's not consider this trade, guys, because you can expect the market taking support and further going towards the upside. So this is only for experienced traders, guys. So only experienced people can trade because your risk to reward ratio is considerable. So you understand that's what I'm saying. The market here mitigated and failed to make a lower low. So you could have tried your stop loss all the way after this kind of impulsive momentum. This impulsive momentum, guys, changed the whole sentiment from market being bearish to bullish. So what we need to see is to always mark the order block level over here. This candle, which actually changed the market sentiment. You can see this is the 5 minute order block. Then this order block is very important since the market here holds some kind of importance, guys. And let's take this out. And even this swing low also. And the market came all the way to this order block level. And here again, the market showed some sort of demand and continued further bullishness. But what you need to see is that even after this kind of bullish momentum, the market failed to make an higher high, and instead the market kind of reversed here. But definitely here you can see the market clearly broke structure here, and even this structure also with impulsive momentum towards the upside. And the order block level is this the last down candle before the market moved towards the upside. So you can consider this to be a 5 minute order block level. And what you can see here is that the market here failed to mitigate this order block level. Again, the market came and showed some kind of huge bearish momentum over here. So what you can see is that even the market here broke structure towards the downside here. You can see a clear break of structure over here. And what you could have marked is the order block level over here. This is a clear order block level, guys, where you could have marked and expected the market to further retrace towards the upside. So this is a 5 minute order block. And you can see after this kind of huge bearish momentum, again the market retraced, but here it failed to make a lower low here. Instead, the market broke this structure high, clearly signifying some sort of support or bullish momentum. You can see instead the market broke structure towards the upside and formed a chop over here. And even with this swing momentum, the market even broke this structure high as well. As soon as the market broke this structure high, or what you could have considered is to mark the anchor gap level here, you can see the market here with this kind of huge bullish candle breaking towards the upside. Or if you consider the fib levels, the high to low of this candle, once if this 50 level has been broken towards the upside, you could have kept your stop loss just below that candle and traded towards the long position. Or after the neckline breakout, guys, you can see here the neckline breakout. Here is where usually you could have easily taken position, keeping your stop loss just below that 200 moving average and targeting all the way to this swing high or this swing high. Or what you could have done is to mark the retracement level of this candle. So this is the manipulative candle. So the swing low to swing high is where you could have drawn here. So the common point between this to the common point between this. So what you could have targeted is you could see as long as the market is trading above the 9 as well as the 21 moving average, you can see this is the 0.26 level where you could have easily targeted, or you could have tried your stop loss all the way to this level, guys. You can see here the market is trading above the 9 as well as the 21 moving average. Again, the market consolidated and broke structure. Again, the market retraced and even broke this structure high. You can see clearly the market broke this structure high here as well. Clear break of structure. And what you could have done is to trial your stop loss to this level over here. So this is where you could have trialed your SL. This is the trial insert. And you can see after the price rejecting from these levels, the market clearly broke structure towards the downside. And you can see the market here found a chalk over here. Instead, you could have exited with a small loss and you could have made a decent profit with this momentum as well. Or you could have exited after this kind of rejection candles from these higher levels. You could see some kind of bearish momentum here, so you could have expected. And what happened is that again the market broke structure towards the downside. You can see a clear break of structure here after a chalk formation, clearly indicating the market sentiment being bearish. So if you consider the high to low of this candle, you can see the market rejecting price from 0.38 level over here. This is the 0.38 level where price is rejecting. And in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 1.68 level over here. You can see clearly the market came to this 1.68 level, short position here after this kind of bearish candle, keeping your stop loss just above that candle itself. Or you could have targeted the 1.68 level, 2.6 level. You can see clearly, guys, where the market came all the way to this 2.6 level and rejected. So you could have targeted it all the way. And if you consider this impulsive momentum also, what you could have considered is to plot the high common point between this to the common point between this. Again, the market is rejecting from 50 levels over here. And what you could have considered is to trial your stop loss all the way, and you could have expected the market to come all the way towards the downside. But definitely, looking at this huge bullish momentum, you could have expected the market taking support from 50 levels. So the swing low to swing line, you could have seen the 50 levels, but here you can see the 50 levels also been broken towards the downside to reach the 2.61861 target. And after this, you can see the market showing some kind of bullish momentum. And like here, the market mitigated this fair value gap over here. You can see this fair value gap has been mitigated. And after this mitigation of this fair value gap, the market again rejected price from these levels and continued further selling towards the downside. So you could have, after this 50 levels retracement, the market clearly broke structure here, guys. So you could have tried your stop loss all the way. But you can see the SL has been hit after this kind of rejection, and the market retraced towards the upside. And you can see this kind of momentum towards the upside where the market retraced here, broke structure towards the upside. Again, it retraced, failed to make a higher high. Instead, the market closed below this low, clearly forming a chalk over here. This is internal chalk. And what you can consider is that this bearish momentum where the market broke chalk over here. So you can consider this to be a order block level as well. This is a 5-minute order block where the market came and mitigated this fair value gap and formed a chalk over here. So what you can consider is to consider this swing momentum, the common point between this to the common point between this. You can see the market rejecting from 50 levels, or you can consider the 0.38 level over here. You can see, guys, this is the 0.38 level where price is rejecting, and and this is the weekly VWAP level as well. So let's not consider this. So this rejection of price, and after this kind of huge bearish candle, again the market retraced. You could have scalped here also, but for target levels, guys, what you could have done is to mark the fib extension levels, the common point between this to the common point between this to the common point between this. So you can target all the way to the 1.68 level, or see again the market here closed all the way to 2.61 level. This is where you could have targeted the short position here, keeping your stop loss just above the VWAP level. You can see multiple price rejection and closing below the VWAP level and targeting all the way to towards the downside. I hope you're understanding, guys, what I'm saying. Here you can see the bullish sentiment. Again, you could have targeted the order block level, so you can consider this kind of demand. Or once the order the this level over here, the market came. After this, the market showed some kind of bullish momentum, and the market even closed above this swing high. Also, you can see the market closed. But what you need to see here is that with this impulsive momentum, where the market even broke this structure high, and but there is no fair value gap here, guys. But what you need to consider is this whole swing momentum as a single move. And what you need to see here is that the market changed the market sentiment from being bearish to bullish, and this swing momentum, which actually changed the market sentiment from being bearish to bullish. And if you plot the common point between this to the common point between this, you can see the market is trading above the 50 levels over here. So this is the 50 levels, guys, where the market is trading above this range over here. And you can see this kind of consolidation. I don't think this is a clear order block level, guys. You can see there is no order block level here. You can see the market coming and mitigating this 50 levels. In case if the market fails to make a lower low here, there is a high chance that the market might continue bullish here. So this is the live Friday's market analysis. So if we try to plot the anchor gap level here, you can see once if this level has been broken towards the upside, there is a very good chance that the market might continue further bullish. So if you try to plot the anchor gap level of this swing low, and what you need to see is that the market formed a chop over here. And in case if the market here, if you consider the swing low to all the way to swing high, you can see this is the 0.38 level over here, where the market is rejecting price from these levels. And what you need to see is that if you consider this swing high to swing low over here, once if this neckline has been broken towards the upside or the 50 levels has been broken towards the upside, we're gonna enter long position, keeping your stop loss above below this candle itself. We are going to enter it here, guys. Since the market is trading here, we are going to enter, keeping our stop loss just below that candle itself and targeting it all the way towards this high, guys. This is where I'm targeting. So this is my live trade analysis, which I already mentioned to you. Or in case, guys, if the market breaks this low and mitigates this fair value gap over here, you can see there is a fair value gap here. In case the market mitigates this fair value gap and price taking support from these levels, there is a very good chance here also that the market might continue further bullish and keeping your stop loss just below this candle, and you can target it all the way to that same zone as well. So there are two entries, guys, for you. We are waiting for the market to break this neckline or even break this high for better confluence. In case the market breaks this high and closes below above that levels, we'll enter that trade itself. So let's wait. And in case the market breaks towards the downside, there is high chance that the market might even break this level and continue all the way to this fair value gaps over here. And once if this levels has been mitigated, there is high chance the market might continue. But the overall sentiment here is bullish, guys. There is a very good chance that the market might go and mitigate this order, this level over here. The 85 500 level is where I'm targeting for today, and you can expect the market to come all the way to that zone. So I hope you're understanding, guys. On Thursday, you can see one, two, three trade setups, guys. Three trade setups, and you could have even taken another trade here as well. You can see after this kind of huge bullish candle where the market even broke this swing highs and breaking the neckline level, what you can see here, you can see this kind of huge rejection from lower levels, and you could have expected the market to reject from after this kind of impulsive momentum, reject from 350 levels or the 200 moving average and continue further selling towards the downside. Instead, the market even broke this 200 moving average in a 5-minute time frame, and even the market broke this structure high as well. You can see with this kind of impulsive momentum where the market broke this structure high. And if you consider this momentum towards the upside, the common point between this to the common point between this, you can see this is a 0.38 level where market is rejecting. This is a 0.38 level where price is rejecting from these levels. And if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move here. You can see this is the 100% move, guys, where the market came all the way, keeping your stop loss just below the 21 moving average. Or you could have plotted the anchor way up level here. So you could have just kept it below the 21 moving average and targeting all the way towards the upside. This is where you could have targeted. You can see the market breaking towards the downside and filling our order block levels. So what you can consider is the market definitely would come all the way to this fair value gaps here, guys, and mitigate this fair value gaps and continue further bullish momentum. So we are waiting for this fair value gaps to be broken. So I haven't entered this position, guys, but I have just told you, or this stock being broken towards the upside, or you can see the market rejecting from 200 moving average here. So you could have taken short position here itself. That was one trade setup where you can see the market was not able to cross this 200 moving average and rejecting price from these levels. In case if the market fails to make a lower low, instead market breaks this high also, there is a very good chance that the market might continue further towards the upside. So what you are seeing is this low being broken or this high being broken towards the upside. Either of these levels being broken towards the upside, we are going to take short or long position. In case if the market breaks size, we are waiting for this position. In case if the market breaks this level, we are entering as soon as the market breaks this level. But definitely the market will come here, guys. There is a imbalance over here, so market might come and mitigate these values and further continue further bullish momentum. So that's about my trade analysis, guys. And on Thursday, you can see one, two, three, four trade setups where you could have taken, and on Wednesday, one, two, three. And in case if you want to go and watch, guys, replay it and watch it once more, and with better confluence only you should trade, guys. So this chalk formation which changed the whole perspective from being bearish to bullish, and you can see this chalk here made the whole sentiment from being bullish to bearish. But this momentum here where the market again took support from these levels and continued further bullish momentum, and here the market broke the internal breakout structure, market mitigated and broke this the neckline over here. So we are entering the neckline breakout and keeping your stop loss just below that candle itself, and you could have targeted the 2.61 level here. And again, the market retraced here to this neckline level itself. Again, the market failed to make a higher high. Instead, the market broke structure towards the downside. So this was an internal chalk formation. Again, the market showed some kind of rejection from 9 hours 21 moving average and formed a bearish candle. So that's where you could have entered, keeping your stop loss just below above that candle, and you could have targeted another 2.61 level. And you can see this swing, which again changed the whole sentiment from being bearish to bullish. And again, this swing over here, if you consider the market is trading above the 50 levels here. So one confluence is that the market might trade above the 50 levels and break this neckline. Or another confluence is that the market might come and take this fair value gap and continue further buying towards the upside. So the overall sentiment is bullish only, guys. So you should always look for long position rather than short trades. I hope you're understanding us what I'm saying. Please like, share, and comment. If you find my videos helpful, guys, leave a comment below. And um, Instagram is the way to go. Message me over there, guys, if you want to keep in touch with me. I would be glad to respond to you. Thank you, guys.